within the Bitcoin ecosystem, it's pretty hard to hurt yourself. But if you find a way to get super leveraged on short-term, extremely expensive margin debt, how do you hurt yourself in the Bitcoin ecosystem? I guess you take out a 5-to-1 levered loan from a crypto exchange. So it's not 100% levered, it's 500% levered, and you post your client. If you can find a way to do a margin loan super levered, then maybe you hurt yourself. But I don't think public companies will be able to do that. I don't think the market will offer publicly traded Bitcoin treasury companies that kind of leverage.
Hey guys, welcome to Everyday Finance. Despite a few short-term warning signs, such as the 50-day moving average close to $114,000, Bitcoin is still generally positive. A robust rise is highlighted by the asset's impressive year-to-date performance. Market capitalization of over $2.1 trillion and decreasing volatility of about 4.8%. As big institutions like JP Morgan and Bank of America start providing loan services backed by Bitcoin ETFs, adoption keeps increasing and could gain additional impetus. Resistance is anticipated at $125,000 and the crucial $140,000 level, while key support is located at $118,000 and $115,000. Michael Saylor, executive chairman of MicroStrategy, recently stated his long-term faith in Bitcoin's future course. With the aid of growing derivatives and hedging techniques that could lower volatility, he anticipates sustained steady growth. By late 2025, analysts who follow his business and the larger Bitcoin market predict that prices will have risen to over $150,000. With a long-term view of about 30% yearly appreciation, Saylor sees no obstacle to Bitcoin reaching $1 million within the next 4 to 8 years, which could put it close to $20 million over the next 20 years. Remember to like, subscribe, and enable notifications for more in-depth coverage. And check back soon for more insights from Saylor's interview.
And by the way, they're small compared to us, but the point is they're not competing against us. Right. They're competing against Japanese equity and Japanese credit in the JPY currency, and that's a distinct capital market. That's why it makes sense to launch a Bitcoin company in Sweden, in Norway, in the Netherlands, in France, in the UK, in Brazil, in Japan, in Canada, and the US. Now, having said all that, right, all those capital markets, they're waiting for a mega champion, and the mega ones, the ones that are pure digital credit issuers, they could be 100x. They could be, they're ones you can take a $10 million or a $1 million company to $1 billion to $10 billion to $100 billion. And if it's a big capital market like the UK or Germany or Japan, you can go to $1 trillion, right? That doesn't mean there can't be 10 other companies in Japan that also follow MetaPlanet, and they all 10x. Because let's take the U.S. We've issued digital credit instruments in the U.S. We've issued, $10, $12 billion of convertible bonds. We have about $8 billion outstanding now. We've issued $6 billion or so of preferred credit. What is that compared to the U.S. credit market? The U.S. dollar credit market is, 100 trillion. Oh, so 1 trillion is 1%. 100 billion is 0.1%. So what is 10 billion? Yeah. It's a basis point. Okay, so what we're doing is we're not competing against the other Bitcoin treasury companies. We are evangelizing and advocating digital credit, and our move is to digitally transform the credit markets. And if we are 1% successful, we sell $1 trillion of digital credit, just 1% successful. So what would help us? What would help us is a dozen other companies in the United States also marketing and evangelizing and educating the investors on digital credit, right? We have 100 million retail investors. How many investors, have dollars and want 10% yield instead of 3% yield from their bank? It's a lot, right? Okay, how many of the 100 million people that would prefer a bank account that yields 10% to a bank account that yields 3%? How many of them know about Stretch, STRC? I mean, a lot of people in the Bitcoin community don't even know about Stretch, right? So I give you a bank account backed by Bitcoin that gives you 10%. Well, what would help us? 100 other companies copying that. You're like, well, won't that get crowded? Okay, well, I'm describing kind of a better bank, right? Instead of going to a traditional fiat bank and getting 3 or 2% on your bank account, you go to a Bitcoin Treasury company and you get 10%. A better bank. Well, how many banks were there in 1920? 25,000. Okay, how many banks are there today? 5,000. Okay, so there could be 5,000 Bitcoin Treasury companies in the US. Would it hurt us? No. Would it hurt them? Not really. Not until 50% of all the credit in the world has been digitally transformed to Bitcoin-backed credit. When there's $100 trillion of Bitcoin-backed credit, the Bitcoin ecosystem is hundreds of trillions. There's hundreds or thousands of companies. Who lost? Okay, and I'll give you the answer, by the way, who's going to lose, right? Outside of the Bitcoin ecosystem, 20th century credit issuers, right? People issuing junk credit, under-collateralized, illiquid, low-yielding garbage, right? They're going to find their credit lines will dry up because why would you invest in illiquid garbage that's not collateralized that gives you 4% when you can invest in liquid credit that pays double or triple that's 10x collateralized, right? So weak, antiquated credit issuers will get squeezed out. You can't even name them, right? It's like 4,000 weak regional banks that are selling preferred shares. You don't even know who they are. You can't even name them. They're trading over the counter. The 20th century over the counter market and the weak credit issuers, they will see credit lines. They will get squeezed, not overnight, but over the course of a decade or 2 decades. Within the Bitcoin ecosystem, it's pretty hard to hurt yourself. But if you find a way to get super leveraged on short-term, extremely expensive margin debt, how do you hurt yourself in the Bitcoin ecosystem? I guess you take out a 5-to-1 levered loan from a crypto exchange. So it's not 100% levered, it's 500% levered, and you post your collateral. If you can find a way to do a margin loan super levered, then maybe you hurt yourself. But I don't think public companies will be able to do that. I don't think the market will offer publicly traded Bitcoin Treasury companies that kind of leverage.
MicroStrategy, a treasury firm that focuses on Bitcoin, has received its first ever credit rating of B- with a stable outlook from S&P Global Ratings. The speculative grade recognizes MicroStrategy's strong market access and sound debt management approach, even if it also indicates substantial credit risk due to the company's enormous Bitcoin exposure of over 640,000 BTC and comparatively low USD liquidity. In anticipation of future upgrades that might liberate billions from Radian-restricted capital pools, Executive Chairman Michael Saylor views the rating as a critical step toward wider institutional adoption of Bitcoin-backed credit, digital finance, which encompasses tokenized assets, proof of stake, chains, exchanges, stablecoins, and rapidly evolving meme coin ecosystems, and digital capital, which is focused on Bitcoin as a long-term store of value with new credit structures built on top of it, are the 2 main categories into which the larger cryptocurrency landscape is increasingly dividing. Major banks wouldn't lend against Bitcoin or ETF wrappers like IBIT just a year ago, but that's rapidly changing. Better loan rates are currently available from institutions like Bank of America, and S&P predicts that by 2026, major participants would directly own Bitcoin, with JP Morgan giving credit against it, speeding up business expansion. Let's go on to other interview highlights now.
So I think if you stick to convertible bonds with longer duration, or if you go to preferred stocks, or even if you went to junk bonds, as long as they were 4 years or longer duration, you're fine holding Bitcoin. The people in the ecosystem that got hurt the most during the crypto winter were Bitcoin miners. And the reason they got hurt, and the reason many of them were forced into liquidation, is they were taking 12-month and 18-month loans that cost 15%, and they weren't buying Bitcoin. They were buying Bitcoin mining rigs that depreciate 20% a year or 30% a year. If you take a short duration loan and buy an asset that depreciates 30% a year, you're going to have a financial problem. If you take a mid-duration or long-duration loan and buy an asset appreciating 30 to 60% a year, you'll probably be fine. So I think that you would have to be very creative and quite cavalier to hurt yourself as a Bitcoin Treasury company in the public market.
Yeah.
You might do it. There'll be a few that will do stupid things, that will be financially irresponsible. But for the most part, you're going to have 3 categories of Bitcoin Treasury companies. You're going to have the pure play digital credit issuers that are laser-like focused. Our company, a Metaplanet, someone like probably a Strive, I'm going to guess. Someone with a lot of equity capital that's going to just sell equity and pure credit, and they're going to be laser-like focused. They're going to 100x or 1,000x. Those are going to be the screaming equity winners. Those are going to be the next Mag 7 stocks, right? Those are companies that can go from $1 billion to $100 billion or to $1 trillion, right? Then you're going to have the strong Bitcoin players. Maybe they're not the single dominant player in their market, but they're strong Bitcoin. They got a lot of stuff going on. They'll 10x, 20x. They'll be good. They'll win, but they won't be the next Mag 7.
Are they issuing credit, or what's kind of that?
They'll be like, companies that are very, that buy a lot of Bitcoin and do some. It's not their laser like 150% focus, but they'll do some, and they'll be strong performers.
Right.
And then you'll have companies that just buy some Bitcoin. And they'll buy some Bitcoin and they'll have another business. Yeah. And over time, the other business may trade sideways, and the Bitcoin will actually support the equity market cap of the company.
Yeah.
And so they're the ones that can't lose, but because they're not 100% focused on Bitcoin, because they have another business, they have other liabilities, they'll grind up with the S&P and they'll be successful even if their core business doesn't work, right? But they'll still be, low risk. Maybe they'll be 2, 3, 4xer, right? And I think you'll see all of that. And it all comes down to the conviction of the management team and the business model. And if you're saying, well, what would I like to be? What you'd like to be is a pure play Bitcoin Treasury company that issues equity and issues high quality Bitcoin credit. And you want to own that capital market. You want to be the category killer in the UK, in France, in Brazil, in Norway, in Japan, in the US, in Canada, right? In Germany, in Italy. The home champion is always going to have a home court. The national champion will have a home court advantage. You're going to have tax advantages, issuance advantages, regulatory advantages, marketing advantages, language, cultural advantages, and focus advantage, right? When you get up and you issued the first digital credit instrument in pounds, your smarter web, and you're doing 100-pound perpetual Bitcoin-backed credit in London. Or then you do in euros on the Frankfurt Stock Exchange, right? Or you do it in yen in Tokyo, right? At that point, you're selling the strongest, highest yielding credit instrument in a capital market that's got garbage. Like, go to Switzerland. You know what the yield is for short-term money in Switzerland? It's negative. Okay? You have $10 million, you put it in a Swiss bank, they take money away from you. In fact, the yields are negative out to 4 years on the yield curve. Okay, so the risk-free cost of capital is literally less than zero. A Swiss company with Bitcoin capital selling something that pays you 400 basis points in Swiss francs is offering 4 or 5% more than everything else.
Michael Saylor emphasized the growing trend in Washington toward digital assets, pointing out that over the past year, support has increased in the House, Senate, and administration. In addition to the nomination of a crypto-friendly CFTC chair, he cited positive moves taken by the SEC and Treasury, with the Treasury Secretary seeing stablecoins as the future tokenized version of the US dollar, the SEC supporting tokenized securities, and the White House adopting Bitcoin as digital gold. Saylor called the last 12 months the most advantageous time in the industry's history. Saylor responded that the necessary foundation has already been established when asked what more lawmakers might accomplish. He thinks that big Western banks will lead the next wave of advancement, and that institutional participation will double the industry's growth and make digital assets available to the next billion users. MicroStrategy led the way in 2020, followed by dozens, and now there are about 250 companies, he said of corporate adoption. As capital markets continue to move toward digital formats, he believes that figure will eventually rise to roughly 5,000. He makes the case that progressive businesses will use digital assets to increase shareholder value more effectively. In the future, Saylor sees a billionaire as interacting on behalf of people and companies, requesting immediate settlement and rejecting sluggish legacy methods. According to him, stablecoins, especially those backed by the dollar, will grow from about $100 billion to trillions of dollars, enabling millions of transactions every second throughout the digital economy. According to him, Bitcoin will continue to be the key store of wealth, allowing for AI-driven capital development online. As the conversation came to an end, viewers were asked to like and subscribe for future material, as well as to comment on possible Bitcoin support levels. Whether they were close to 115,000 or lower,